the power of the 10-year Treasury yield is if you see it move up. If it gets closer to like 5%, that puts a risk-off environment. When I say a risk-off environment, that means an environment where people see the returns that you're getting from fixed income, a bond, that's 5% with quote unquote no risk. You do have inflation risk, but that's a different video. We can I'll link a video to that in the description. But where you have inflation risk, so inside the bond, but people look for bonds to be their safe part. That's their safe play inside of what they have. So if bonds get up to 5%, and historically over the long run, stocks average, I guess it depends on who you're asking, 7 to 10% returns over the long run. But that's associated with risk. So if you're someone closer to retirement age, or even someone who's risk averse, and you see these bond levels come up to 5%, that makes people want to take their risk off, which means reducing their stock exposure and increasing their cash or safe positions. Alternatives have been really big this year as well. We've seen gold lead the way. Last year, gold was a big winner last year. We've seen gold take a huge moves already to begin this year. You are going to invest in some type of physical asset. I guess gold may be the one. I don't know. Silver seems to be very memeish. It's been up and down, just trading like almost like crypto at the rate that it's moving up and down. But gold's been a little more stable. If you already have gold, it probably wouldn't hurt to hold it. I don't know if I would go chasing gold at these levels. And if you bought gold last week, you might just want to hold steady for a little bit and see where things go. See how everything works out or levels out with the gold trade right now. But gold's a good store value. Gold didn't do anything for 2 decades, and then we saw a dramatic run in the last year. So maybe that run still has more time to go inside the cyclical rotation that we're seeing.